Hi, this is Janet with Paper and Spark. This is part 5, the 5th and final video tutorial as part of our series on how to use your inventory cost and pricing spreadsheet. If you don't have your inventory cost and pricing spreadsheet, it's available for sale at paperandspark.com. Okay, so now that we've covered how to use the inventory tab, let's move on to these pink annual sales tabs. The sales tabs are going to summarize info that you've been entering on the other tabs of your spreadsheet throughout the year. So whether or not you see any totals here and whether or not they're accurate, that mainly depends on whether you've been dating all your previous entries. That means entering dates for items sold over on the inventory tab, and it means using dates for your purchases over on the materials tabs. So when you enter a date sold for any item on the inventory tab, the sales tab will automatically sum the sales price and the cost of goods sold into the applicable monthly column on this tab. Cost of goods sold means the total cost of any supplies and raw materials that went into the finished good that you sold during that time period. So we've previously been talking about cost of goods made. That's how much the finished inventory item sitting on your shelf costs you to make. When that item sells, that cost moves from the cost of goods made bucket into the cost of goods sold bucket, if that makes sense. I have more info on this in the Paper and Spark library if you want to read a little bit more about it. The sales tab will sum these amounts for you on an ongoing basis and give you a running total for the entire year. Now, version 2.0 of this spreadsheet has some really helpful updates to the sales tab, particularly if you plan to use the spreadsheet to assist you with filling out the inventory section of your Schedule C. So if you're using version 2.0, which chances are you are if you're watching this video, you're going to see a lot of additional info here on these sales tabs. Since this is an update from the video that you might have watched in a previous lesson, I'm going to rewind for a second to show you something new on the materials tabs, which are these units used and units remaining and cost of units remaining columns. Now, the columns are pretty self-explanatory. As you use your supplies and materials in the finished goods you create, or as you enter things on the cost of goods made tab, you should enter your units used. If you enter items there, you should enter them on a cumulative basis. So as you go, all the units that you use up, you keep updating and increasing this number, and then the spreadsheet will calculate automatically how many units you have remaining based on how many units you said you originally purchased. It also takes those units remaining and it's going to multiply that amount by the cost per unit to determine the cost of units remaining for you. Now I'm just running through this now really quickly, and hopefully you're keeping this amount updated throughout the year, because these columns are going to be really helpful for you at tax time on your Schedule C and when you're doing your end of year inventory count. So just keep this column in mind as we discuss what's going on over here in this sales tab section. Now, before I delve too much into explaining this section, you might need to educate yourself a little bit more on exactly what the IRS requires you to report as far as inventory goes on your Schedule C. I've got 2 posts about that in the Paper and Spark library, along with a great quick video tutorial on inventory on your Schedule C and what inventory is at the link posted here, and I suggest you check that out first. The video linked to here explains exactly what you'll need for part 3 of your Schedule C, so you'll really understand why these numbers that the spreadsheet is calculating for you are going to be so helpful and important. Alright, moving on from that. First, you're going to see your beginning inventory, which is going to be 0 for your first year of business. If this isn't your first year of business, but it is your first year using the spreadsheet, you can override this cell to be what it needs to be based on your last year's tax return. Remember that on your tax return, your beginning inventory for the year needs to match your ending inventory from last year. So if you need to override this cell, all you have to do is type in the amount that you want to override it. So if last year on my Schedule C, my ending inventory was $200, I can just type in 200 and I'm good to go. Okay, next the spreadsheet will calculate your total material and supply purchases for the year. Now it's summing this number based solely on the dates you're entering for your purchases over on all your material tabs. So if these dates aren't correct, or if you're not entering dates here, then your purchases number for the year is not going to be correct. Okay. This is going to be a number that goes on part 3 of your Schedule C. So it's a really helpful number for the spreadsheet to keep track of if you're doing it accurately. Next, we've got ending inventory finished goods. Okay, at the end of the year, valued at cost. This amount is the sum of all the items on your inventory tab that are not marked as sold, as in they are blank in this date sold column. So if you're keeping this tab up to date with what sells, then the amount that is your ending year finished goods should be pretty accurate. Again, this is the cost of all your finished goods that are still sitting on your shelf at that point in time. Next, we've got your ending materials and supplies. This is going to be the sum of the cost of remaining units column on every materials tab added together. That means you should be keeping your units used column up to date if you want this number to be accurate. And again, what I said earlier, your cost of units remaining is simply the units remaining multiplied by your original cost per unit. I have this column here specifically because you need to know the cost of all your ending inventoriable supplies plus your ending finished goods for your tax return. So these two numbers together are going to sum up to be your total ending inventory. That's going to be the cost of all the ending inventory, the finished goods still on your shelf at the end of the year, plus the cost of your ending materials and supplies still on your shelf at the end of the year. That equals your total ending inventory, which is a number that you're asked for on part 3 of your Schedule C. Now, a few things about these ending inventory amounts. First, you need to verify them at year end, that's December 31st for most people, with a physical count. I don't want you to just blindly take these totals, or this total because you just need that one, and plop it onto your tax return without making sure it's accurate. You might need to adjust this number for a lot of different things. You might have forgotten to enter something, you might have forgotten to mark something as sold, you might need to account for materials or finished goods that you took out for personal use, or you could have scraps or waste or things like that that you need to adjust this number for. That means performing a physical count of all your inventory at year end. So for your materials, on December 31st, ideally you'd go through all your material tabs and check that your units remaining match what's really still on your shelf. This isn't going to be a fun process because it might involve counting a ton of beads, or you might have to measure a bunch of fabric, but if it doesn't match, you should override this column to match what you really have on your shelf. So let's say I go through and I really only have 8 of these beads, I'm going to change that to 8 so that my cost of units remaining is accurate. That way, the sum of all of these cost of units remaining on your materials tabs is correct over here on your ending materials and supplies cell. To verify this ending year finished goods is correct. You'll want to verify that all the items that are not marked as sold on your inventory tab are really still sitting on your shelf waiting to be sold. And you'll also want to look at that theoretical shelf and make sure that you don't have items on there that are missing from your inventory tab or from your materials tab that need to be entered. So after performing a year-end inventory count and doing all that measuring, you can adjust or verify this total ending inventory amount before putting it on your tax return. Now I've got something that's a bit confusing to address. At the end of the year, you need to do what I call closing out your annual sales tab. Here's the deal. The formulas for these cells here are looking to your material tabs and your inventory tabs, and they're constantly changing. So these amounts, they're not using dated formulas. They're always getting updated based on what you entered. They're looking at just what's blank versus not blank. So as you mark items sold, even in the next year, this number is going to change. That means that if you're staying up to date with your spreadsheet, these amounts might be accurate on December 31st at the end of the year, but then they might change and become inaccurate as you mark items sold in the next year. So I've set up these special little light blue boxes for you to manually enter your verified final numbers for inventory that's used on your tax return. So after you do your inventory count and get the final verified amounts for your tax return, you should manually type in those amounts here for your records. That way, if the numbers in the gray cells change, which they will, and become inaccurate and unreliable, it doesn't matter. You'll know here what you really put on your tax return. And this total ending inventory, the final verified ending inventory amount, is going to flow to your next year's beginning inventory so that all these numbers will then be correct for next year. So this is pretty much how your inventory cost and pricing spreadsheet works. It can do a lot of analysis for you and a lot of number crunching. Just make sure that you're using it and updating it consistently. You're entering your raw material and supply purchases as you purchase them. You're linking to your new products as you create them. You're consistently monitoring your overhead rate for any changes. You're going through the exercise of pricing and making sure you feel comfortable with the prices. You're entering it on the inventory list, the date that you list it for sale and the date that you sell it. And you can also use this spreadsheet to do some other things like develop wholesale line sheets or create bulk discounts. You can use your spreadsheet to analyze whether your pricing markups are creating a big enough profit margin for you to grow and for you to pay yourself appropriately. You can use your spreadsheet at tax time to generate some important numbers that you need on your tax return. You can do a lot with it. So I hope that you find it helpful. If you have any questions or suggestions or feedback for me or frustrations, maybe something's not working how you anticipate, you can always feel free to reach out to me. My email address is paperandspark@gmail.com. And thank you again for purchasing. I wish you many happy sales.